Hi, welcome back to the second part of the video. In this part of the video, I'll be explaining to you on how to prepare depreciation on machinery for the years ended 30th of June 2014 and 30th of June 2015. So once again, this is also an account question whereby you need to prepare a ledger account. So with all the necessary formats. So you got a date, particulars, here machinery account is depreciation on machinery account is an expense account. So this is something that you must take note of, meaning you will always have a closure of profit and loss, not balance brought down. Which also means that since there's no balance brought down, you cannot have a 1st July 2013 kind of entry. You'll need to have the 30th of June 2014 entry. So here we go. So depreciation will always have entries on the last day of the financial year. That's all about it. And the only particulars you have will be accumulated depreciation. You have to write the name of the account in total. So we did some workings earlier on, and you need to write down the workings next to the accounts. So what you have here is these two workings. So you can write down okay. So here we go. We have this is the workings. So to write it down, I'm gonna write it down here. And we are going to debit the amount because this is a plus minus account. So the total of these two amounts, 5,005 and 2,005, that gives us 8,000 of depreciation just for the financial year on ending 30th of June 2014. So 8,000 DR, and then here you're going to write down profit and loss because the closure is such that it's profit and loss to the profit and loss, so it appears in the income statement in the profit and loss portion. We will credit the amount such that we have 0 left. Having said that, now we're going to move on to the next financial year. The same particulars will take place, but this time around the workings are different. We're going to use this set of workings. So we're going to write is basically 100,000 minus 45,000 minus 5,005 that we had last year times by 10%, plus with the machinery number 2 depreciation 50,000 minus 4750 multiplied by 10%. So that's done. So here the amount, if we add it up, we're gonna get about 9,600 or 9,700. And here we are going to have a 9,700 debit, and on the same day we will have to close it off to the profit and loss. So we are going to credit the amount 9,700. So yep, this is how you prepare the depreciation account, whereby you must take note, you must always close off the profit and loss. So doing this working initially helps, and it'd be good if you just write it on your piece of ledger paper when you submit the answer as well. So we're going to put the next part of the question, part C, where they ask you to prepare the accumulated depreciation on machinery, also for 2 years. So we're going to write the title, for accumulated depreciation on machinery, the particulars would be the opposite one, which in this case would be your depreciation on machinery. So here we go. But because accumulated depreciation of machinery it appears in the balance sheet, so you don't have a closure of profit and loss, you need to have a closure of balance brought down. And because it has a balance brought down, sometimes the question will have a beginning balance brought down, like in this case. On 1st July, there's an accumulated depreciation amount of 45,000. So you gotta go on 2013 first, and you write July 1st, balance brought down, and put in 45,000. This is a contra asset account. It is a minus plus account, so you need to have a credit balance for its running balance brought down on July 1st, 2013. Next, here we're gonna go to the last day of the financial year, so it's gonna be this entry. So it's like the opposite. So we're gonna have to write the year first, right, June 30th. We'll have this entry, but we'll write the partner's name, and this term, the amount 8,000, we will write on the credit side. So what we're gonna have is actually as much as 53,000 credit. So once that's done, leave a line to indicate that this is the next financial year. So you bring down the balance of 53,000. Once that's done, we are going to the last day of the second financial year, so this will fall on the 2015. So we will have this line of entry, and the amount will be 9,700. So having done that, it will bring us up to 62,700 credit. So remember to do your balance brought down. So you leave a line, write July 1st, balance brought down, 62,700 credit. So this is how you prepare the accumulated depreciation account. So questions will generally ask you one of these three accounts, and accumulated depreciation will be the most likely account that it will test you on.